And you know how to share your screen?
I know how to share mine.
Yeah. James, I know you're on here. I just clicked the live button. We're testing out some new software. There's probably other people live on here, but I see you're commenting. Tell us if you can hear us.
Can I get a mic check?
Software. There's probably other people live on here, but I see you're commenting. Tell us if you can hear us. Okay. That was it playing in my. It was playing in YouTube as well. Software.
They're in the computer?
I hear you loud. Okay, too loud, James? Alan, Frank Bruno.
Got someone from Orlando.
Where are you seeing where they're from?
It says good morning from Orlando, Sorcerer.
Oh, okay.
Yeah, so I've been to Orlando more times than I wish to count because my wife loves to go to Disney. Okay? Been to Disney 3 times, been to Disneyland once.
Yeah, you don't even try. Not too loud. Okay. Neil. Nice. Hey, so I tried to put this in the email this morning. This is obviously our pilot broadcast here. Mm-hmm. So you have to follow the page, I believe, to be able to comment. This is also going to help when we start doing contests and prizes, because there's a prize deal on here where we can do the selection through this software if you're in the chat feature. We'll get more into that. But anybody who is not able to comment, if you follow the page, you should be able to do so. We see a little different screen than you do, so I'm going to have to watch the recording of this.
Nigeria. Got someone. Nigeria's in the house.
Farthest travel.
Yeah. Where is everybody else from? Seeing a lot of names. That's great. It's great. Seeing some usual suspects.
Can anybody see how many people are on here?
I cannot. As everybody can tell, this is version 1 of a brand new software. So like Ben said, pilot style, but we're going to have a lot of fun. It might take us a few minutes to just kind of get going, get comfortable, but we're really excited about the show that we're launching. So we're going to do this a lot.
Testing. Greg from Chi-Town. James, mainly Maine Maniac. I like it.
Yeah, mainly Maine Maniac.
So, James, I got your message this morning about the paper trades, and that really is a great point. You've been a member of ours for a while, and I know you've had some success with it, and I know it goes back and forth. And a lot of traders who follow us or who are members or have gone through the workshops, I know there's a part of the education where you're watching it in a video or you're reading an email or you're getting an alert. And the reason we really wanted to take this live and to put this in is so that we can really interact because this is the experience I get. I get to talk to Steve. I get to talk to guys like Greg. I'll introduce Greg in a minute, by the way. But this is how, I'm able to trade successfully. And a lot of people are when you have this kind of interaction. Plus, it'll be fun. I don't know about you guys, but I like doing stuff like this. I like interacting with other traders and talking about stuff that I enjoy. And I want to make some money, and I want you guys to make some money. So what we're going to do is just kind of kick things off. This is what we decided to do is do this test, this pilot run for this using Steve's top ETF list. This is a breakdown of ETFs that he's got his eye on. He's been sending this video out for, I don't know, how long, Steve? You've sent out so many of those.
Years.
Years. So we decided what a better way to do this, this pilot broadcast here than to go over the top ETF video or list. Basically, we'll get better. I promise you. But Steve, how do you want to kick things off today? Like, what do you think would be the best way to do this?
Well, first, I want to add a little bit more to what Ben's talking about. When Ben says we'll get better, like we're going to add prizes, we're going to add contests, like we are going to add things that we really want you to engage with us. Not only do we want you to engage with us, we want you to feel comfortable engaging with us because you can see us, you can get to know our personalities, right? we want this to be fun. So we are going to do everything we can to not only give you some education, give you some trade ideas every single time we put on the show, right? Give you my analysis, but our job is to engage with you. You get to know us, we get to know you. We all have fun, right? And that's really the goal.
And there will be multiple segments of this show. This is, like I said, the top ETF. This is where we decided the best place to start. But we're going to do a couple more test runs, and then by the end of next week, first week of September, we want to have a full schedule out for you guys.
Yep.
Different segments. Greg be working with us on the option segments. I know that's such a big hot topic for us, and Steve and I have been very transparent. We add options to our weekly reversal trades, but we did not spend as much time as Greg has learning options, learning how to trade options. So he's here to really help us there. But Greg has a vast knowledge of the market, and I think he can help us in many segments. So Greg Kilpack, everybody. Greg, you want to say hi? Introduce yourself.
Tell me where you're from. How are you doing? My name is Greg Kilpack. I have been involved with the markets now for over 30 years. I manage money for wealthy investors, actually make the buying and selling decisions. And I've been focused on strategy specifically the whole time for stocks and options in terms of short-term trading and long-term investing. So I know a lot about what's happened, and I can even go into history about what's happened in the markets long before even I was born. Certainly before many of you were born. So, if you want to talk about how the Great Depression unfolded, I can talk about the charts and show you what happened because I've studied these things.
That might be a segment we get into. Okay. Neil just asked, is this being recorded? Neil, I really hope so.
Yeah, it is.
I really do. It's supposed to be being recorded. I'll tell you that much. And I will definitely be sending out a recap in this video as soon as I figure out how to get that recording rendered.
Absolutely.
So thank you, Greg. Greg, by the way, where are you from?
I live in Largo, Florida, which is west of Tampa.
Gotcha. Greg's a Florida man. And as you probably know, Steve and I are in Arkansas. Not too far from each other.
Big Suey.
Yep, Big Suey. Okay. They probably listened to this banter enough. Steve, what are you thinking about the ETFs?
Yeah, so I think here's what we're going to do today, right? I'm going to start with an overall market review, right? Some things have happened with the market. The NASDAQ, looked like it broke down a little bit and it's starting to come back. So I like to start with the market overview to really look at the major indices. And then what we're going to do is we're going to look at the top ETFs of the week, right? When I say of the week, Monday through Thursday, right? So far, and plus the first hour of today. Right. And then we're going to look at the bottom. Right. So we're going to look at kind of what to look for, what to stay away from. And then we're going to look at kind of a 30-day list and a 90-day list. So the idea, especially when you're looking for good trends or good trade ideas, like you don't want just something to pop up to have a really good, strong 4 days, because even bad charts can have a strong 4 days. You want to cross-reference those with longer time frames. And if you're seeing some of the same ideas, which we're going to, across, the 1 week, the 1 month, the 3 month, right? Those are your best trends. Those are your best ideas, right? So we're looking for trends because one thing I've always learned as a trend follower, strength follows strength, right? Weakness follows weakness. Okay. So that's really what we're going to go over today. And this is going to be incredibly engaging. At the end, you feel free to ask questions, at any time. But at the end, we're definitely going to, bring your ticker. Let me know if there's something you want me to look at, something you want me to analyze. I'll gladly do it until they're all answered. Okay. Does that sound fair?
Steve, that sounds very fair. And just so you know, guys, like we are, as much education as we want to deliver, we are here to make money and we are here to help you guys make money. So I'm hoping that Steve sees something or Greg sees something that we can put into an actionable trade today or in the near future. Like that's the goal here. So as much fun as I want to have here, as much as I want to educate, just remember, like you bring us your tickers, you bring us things that you want us to look at. We're going to do the same. break them down and see if we see something that we should be getting into.
Absolutely. And to add to that, I always say, like, when I show up to a show, or when I do give a presentation or even watch a presentation, I'm really looking to walk away from trade ideas and a solid gold nugget, right? Something that I'm not implementing, like a style or a risk management tool or anything, just a solid nugget I can walk away from, try to process for a few days over the weekend and say, hey, does this or does this not make sense for me to implement in my trade plan? Okay, so I give gold nuggets all the time, but yes, Ben is right. We are looking here to make money on some ETFs. And like I said, we're going to launch more shows. Greg's going to have a show that is completely around option income. We'll have some stock shows. We'll have a lot of different themes. All right. But this is show 1. So I'm going to go ahead and get started.
Hey, Steve, is everybody here familiar with ETFs? You want us?
That's a great question.
Like, where should we start here? You know, I mean, like, I obviously some are. Like, John just said he likes to look at XLY. Thank you. And Terrence wants to look at SPY and the Qs. Thank you. I really do appreciate y'all letting us know. But if anybody has any questions on the basics, like, we're totally fine going over that stuff. Steve, you want to give a rundown of what you think?
Yeah, it's actually very simple. Most of us know what mutual funds are because mutual funds have been around for a very long time, right? A mutual fund is a basket of stocks, but the difference between a mutual fund is they're usually more actively managed, and you only get one price at the end of the day of a mutual fund. So whereas an ETFs are usually more passively managed, means there's not a lot of buying and selling. They usually follow a certain index, right? But you can trade it like a stock throughout the day. So they're very similar in nature, where they both hold basket of stocks. ETFs are lower cost because they're not actively trading, right? So they have tax advantages to them, and you can trade them just like a stock. Okay. So if you see a chart of the popularity of mutual funds and ETFs over the last 10 years, you'll see mutual funds do this and ETFs, like, they just kind of cross, right? Like, ETFs just have become a lot more popular due to the cost, because most mutual funds don't beat the index anyways. So no, that's a fair question. So let me get started. I'm going to share my screen, right? And let me know if everybody can see this, right? I want to make sure that everyone can see my market smith. I'm looking at the NASDAQ. So can I get a yep? Ben, can you see that?
Ben, you're muted still.
There we go. Okay. So everyone can see my screen of NASDAQ. So I'm going to get started on the overall market analysis, and then we'll look at the NASDAQ, we'll look at the SPY, we'll look at, the Russell 2000, and just kind of get a general idea of, what is going on in the market and where I'm thinking. So let's start with the NASDAQ, because I trade growth stocks mostly. So I tend to, favor the NASDAQ because it's more tech, biotech, growth oriented. But I always like to start with this box, right? The NASDAQ really was trading in a box right here, and that goes all the way back from where it peaked in early February and then just kind of pinballed around, right? So, and this is normally very common, right? These aren't fun. Don't get me wrong. No one likes to be in a box, but they're incredibly healthy, because once you make a really, really nice move in a trend, right, the market has to consolidate. They have to digest the gains. They have to give it time before the next trend emerges. We don't always know how strong the next trend is going to be, right? There's plenty of things that move it. But then the NASDAQ broke out of the box, right, and came back and tested the 50-day moving average successfully. And then momentum really slowed, right? So like right now, the NASDAQ is the same price it was about 6 weeks ago, okay? So right now it's slowing, right? That's kind of the bearish case. The bullish case is that the NASDAQ broke the 50-day moving average 2 days ago, barely, and then it kind of reversed, or it did reverse. You can see right there, you can see that reversal. It reversed higher, back above the line, and today, as of this morning, it is, right, popping back above. So a lot of times you have these whipsaws, or you have these false breakdowns. So if something tries to break down and then immediately comes back, I usually see that as bullish, right? Because it's a false breakdown, usually means an above average move the other way. Same thing for a breakout. If something breaks out then rolls back over, it usually means, right, negative consequences are coming. But at the end of the day, we have to look at what's on the charts, right? We have to look at, here, I'm going to blow this up a little bit. We have to look at the overall market, okay? So right here, we're just kind of waiting and seeing, right? One thing I always say when I look at when the market's pulling back, right? You know, when it breaks the 50-day moving average, right? Sometimes it can snap back. The pink line, the orange line is the 50-day moving average. Now, if you followed me for a minute, you know that that's really my trend line because I trade growth stocks, and a lot of times in strong moves, that 50-day moving average will hold. Now, it's not the end all be all, but it is a good tool to use, right? It's one of the only indicators I use are moving averages. Now, kind of something to think about right here is when a lot of times when the market tries to break down, it will snap back and it'll find resistance at that 20-day moving average. So you got the 20-day moving average, the pink line that's kind of curling down, right? You can kind of see it right here. So the pink line is curling down, and sometimes the market will snap back, find rejection at that pink line, and then kind of take that leg. And to prove that point, you can see right here, you had this sell-off right here, broke the 50-day moving average, right? Closed below it right here. It came back, hit the pink line once, hit the pink line twice, rolled over, breaks through the third time. So that's not a prediction, right, of what's gonna come. This could bounce right out of here, but it is just something that I've noticed time and time again. If we are in a correction, which we're not yet, we're in a very simple pullback. But if you are in a correction and the market kind of takes a steep drop, a lot of times it will come back and hit that resistance once, hit it twice, third time's a charm. Okay. So it's just something to consider. All right. But right now, here's the bullish side, right? We broke out of an all-time high right here. We came back and we tested that all-time high, that support line, which is also the 50-day moving average. Right now, for the moment, we're finding support around the 50-day moving average, even though it briefly broke below on Wednesday, right? And then yesterday, it closed right at it. And then today it's slightly above it. Okay. So the only thing I would say is this could really bounce out of here on Monday. All right. So that's my analysis on the NASDAQ. It's pulling back. The S&P 500 is actually a little bit stronger. Right. So let me move this out of the way so I can kind of drop and drag here. Okay. So let's look at the S&P 500 for a minute. The S&P 500 is obviously stronger. You can see right here, it never broke the 50-day moving average, right? This is actually a really, really strong trend. Now, there's a big difference between even though the S&P and the 500, NASDAQ, they're going to move together, but they really have a lot of different sectors, right? The S&P is more diversified. It has energies. It has financials, right? It just has a lot of those value sectors in them where NASDAQ has really more growth, okay? But they really move together. So I would say like right now, this is such a strong uptrend and has been going back since it broke out in November, right? Every time it comes around the 50-day moving average, right? Even though it briefly broke below it, immediately came back. Support, 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 support. Okay. So I can easily make the bearish case that, you know, this is eventually going to break, and eventually it will. But like I said earlier, strength follows strength, weakness follows weakness. So when you are in an uptrend, you need to mentally have, you know, bullish outcomes in your head, right? You need to be looking for bullish outcomes, not bearish outcomes, right? And that was a major mental shift I had years ago because every time the market pulled back, I thought it was going to be a big one. Right. And the minute I got rid of that, you know, kind of psychological mindset, and I started looking for, if we're in an uptrend, every little pullback, I started looking for bullish setups instead of bearish. I started making a lot more money, right? Because I'm just trying to follow the trend. And we are in a major, major bull market, whether we have bear markets along the way. I do want to look at the Russell 2000, and these are the small cap indexes. Now, this is not looking so hot, right? You can see right here that this index hasn't really gone anywhere. Then yesterday it broke the 200-day moving average. That's not good, right? That's not good, right? It's caution, right? Kind of a little yellow flag right here. It could come right back, right? Which would be a bullish sign. But I don't always look at the Russell 2000 as it is not as correlated with the S&P 500 and the NASDAQ as you might think. The Russell 2000 has a lot of financials in it, right? It has a lot of those small regional banks in it, right? And what that means is it's pretty correlated to interest rates. So banks do well when interest rates rise. Banks do bad when interest rates falls. Okay, so interest rates are starting to fall again, the 30-year, and we can look at that before the day is over. And that usually has a negative impact of the Russell 2000. So to simplify, I don't make trading decisions off the Russell 2000, right? I don't look at the Russell 2000 and say, well, this doesn't look good. That means growth stocks aren't going to do good. Because I've tested, I've looked at these Russell 2000 trends. They seem to have a mind of their own, all right? So when I'm, taking signals off my market timing system, I'm never buying this, right? I'm buying, the tech trend. I'm buying the QQQs or something like that, okay?
Hey,
so,
Steve.
Yep.
Can we pause for just a sec? I'm just want to test here how much information people can take at one time. So are there any questions so far with what Steve said?
That's fair, because I sure do like to talk.
I have to take it in segments our whole lives. That's what I've been doing.
Mm-hmm.
No? Nothing? Okay, Steve.
All right, cool. So that's really the market analysis. So right now I have a yellow flag, right? I'm just kind of like proceed with caution. And especially I'm looking to Monday to see what the market does Monday. And if the market pops on Monday, I'm going to go back to the NASDAQ chart and I'm going to say, okay, right, the NASDAQ, really reversed yesterday and is now moving higher up at the moment, 0.73%. If it can clear that pink line, which is the 20-day moving average, right, that'd be pretty bullish for me. I'd be looking to really get back on board. So let's look at some top. If no one has any questions about the indices, let's look at some of the top ETFs. Okay.
Before we get into that, could I add something to the conversation?
Oh yeah, absolutely.
Okay. What's going on right now is that the Fed has been talking about tapering, which means that they're slowing down. They want to slow down the amount of stimulus they're putting into the economy. And the second they talk about that, the market pauses. They don't like to hear about that. Investors want more and more money to go in to drive the market up. In recent months, when they have talked about tapering publicly, they don't actually do it. They actually have added more stimulus or kept the same amount. And so we need to keep a close eye on if they're actually going to add stimulus or if they're actually going to carry out the tapering. They have to stop the stimulus at some point, and when that happens, the market's going to slide. But until that happens, it hasn't happened yet.
It hasn't happened yet. They've been doing QE for quantitative easing, asset purchasing for about, Greg, if you can mute yourself. It's been going on for about 10 years. So when Greg makes a good point, when I saw the tapering conversation with the Fed minutes a couple days ago, first words that came out of my mouth were, I'll believe it when I see it. Right? They've just been doing it for so long. And the minute they say they're going to do it, the market might respond so negatively, they might back off on that tapering, right? Because right now, I think Greg would agree, Wall Street is addicted to the cash that the Fed is injecting, okay? Now we say that to say this. At the end of the day, you need to pay attention to what's on the chart, right? Because the one thing we've learned over the last decade, sometimes bad news is good news in the market and vice versa. So at the end of the day, make your decisions based on what the market is doing, not always what the Fed is doing. If they begin to taper and the market rolls over, that's the confirmation. If they begin to taper and the market really doesn't do anything or goes up, it might already be priced into the market. Don't try to pull your hair out trying to figure that analysis out, because everything you need to know is on the chart. Okay? Everything you need to know is on the chart. So no, that's a really good point, Greg.
A couple of things. We're getting a lot of responses. You guys can see the chats about yeah, I'm watching the chats about our sounds. I can hear Steve great. Greg's had a little bit. We'll work on that. If anybody goes where you cannot hear us, like just cannot hear us at all, can't turn the volume up, let me know. We'll probably have to get some new microphones to continue this, but we'll work on that. So what was it that
looks like one person is having problems with the volume so far? So
there might be two. I heard it on Greg's too, but anyways, we'll get that going. But somebody asked, strength follows strength. Can you expand on that a little bit?
That's pure trend following rules, right? Like strength follows strength and weakness always follows weakness. So the logic is like, have you ever heard like when something starts to get strong, something can always go higher than you thought it can, right? And I think last summer is a great example where the NASDAQ went higher than we all thought it could. So it means when the market's in an uptrend, you have to continue to expect bullish outcomes until the market, changes directions. So when I say strength follows strength, when you see strength, you need to trade that strength until we're in a different market environment, right? So stay invested, stay in your stocks or stay bullish, right, with your swing trades. And always look for bullish. If the market's in an uptrend, you need to be looking for bullish outcomes. If the market's in a downtrend, you need to expect bearish outcomes until we get some kind of bullish signal. Okay? It's really, really that simple. All right. So let's look at the top ETFs of the week. All right. So I have this list over here. I have a list of approximately, let's see, why does this change year to date? What happened to my price change year to date? It almost changed my format. That wasn't like that this morning. Well, let's look at price change. All right, what's happening today? All right, we'll start there. And then we can kind of look at, some relative strength rankings. Actually, I really want to. Give me just a second. Can we stop sharing my screen? Let me stop sharing my screen for just 1 second. Let me see if I can fix this issue.
I know that's our first time running this, but I really dig how much you guys are like engaging here. Terrence, and we will get to these good questions and comments here shortly. I am watching the comment section. I promise you that. Top 5 sectors are still going up. Is it what software are you on, Steve? Stock charts?
Yeah, hold on. I'm just dragging some things over. No, I'm on MarketSmith.
Okay.
So we got, all right, I'm fixing this. Current change of the week. And then change year to date, relative strength ranking. Okay, let's just do that. We'll go off those lists. I can make sure. There we go. There you are, you beautiful chart, you. All right.
Steve, real quick, before we go into that, let's catch up on these comments real quick, and then we'll jump back into that.
Go for it.
Scroll up to where Terrence mentions, I think that's the first comment. Terrence Meltz, USD is going up. Is that not bad for stocks? Can you see that comment?
Yeah.
And then just go down.
No, that's fair. Let's cover the dollar in a minute. I'm going to cover this. I'm going to cover the dollar in a minute because we're about to talk about commodities, and I'm going to show you kind of the inverse relationship. So it's really always not bad for it's worse off for commodities. We'll talk about that relationship here in a second. I fully plan on covering that. So right here, we're going to look at, I'm going to rank these. And again, I have 253 ETFs in this list. That is not every ETF in the universe, but that covers just about every industry, every sector. I have a lot of country ETFs. So, what I'm doing is we're going to look at, what has changed so far week to date, right? From the beginning of the week to right now. And then we're going to cross-reference that list with what has changed over the last 1 month. Okay. And then we're going to cross-reference that to something that has the 3 month, right? So we're going to go 1 week, right? 1 month and 3 month. And what we're going to do is we're going to say, okay, what's strong this week? What is strong in this month? And what's been strong over the last 3 months? The goal is to really find a few ideas that just keep popping up on these scanners because they really give you the best opportunity for the trend to continue. So let's start really with the top 10 of the week. All right. So I'm going to rank this, right? And we're just going to go through these. I'm going to go through the top 10 and we're going to look at the charts and we're going to see if any of them are worth a trade. So the top ETF of the week so far is actually not very exciting. It's the Philippines EPHE. Now I'm going to kind of expand on this and look at the weekly chart. Let me kind of open this up a little bit. So you can really see the weekly chart, even though it's up, almost 4% this week, this is still an ugly sideways chart. I don't like it at all, right? And that's why sometimes you even have ugly charts that might pop for the week, but at the end of the day, I see this as in a downtrend. Like it might try to bounce off here, but if I go back to the weekly chart, it's got a history of going nowhere for the last several years. All right. So that's probably not something that I really care about at the moment. I'm looking for trends. So let's go back to next on the list. And I want to look at the daily chart and I'll toggle back and forth. You'll see daily, weekly. This chart looks good right here. You have UNG. Okay. You have the UNG ETF. It actually looks really strong. You can see that even though energy has gotten punished, oil has gotten punished absolutely this week, rolled over with a lot of the metals. You can see right here that this went from 9 to 14. So that's a pretty big move. And it came back and it tests the 50-day moving average for the first time. That gives it when you have a 50-day, when you have a strong trend, and this is a strong trend, you have the 50-day. You have the golden cross right here, the 50-day, the orange line moved above the black line. So that's the golden cross. That means when the 50-day moves above the 200-day, it's usually a long-term bullish signal. Okay. So it went up, and now it's pulling back, right? But the interesting thing is yesterday it pulled back, touched the 50-day moving average, kind of gave it a kiss, and bounced back off it, and now it's back above the pink line, which is the 20-day moving average. All right. Do I think this is going to straight up V-shape out of here? Maybe not, but it could do something like this, right? And when it pops and pulls back, I think a great entry would be as it buys across there, or honestly, I think right now could be a great entry because this is a low risk entry. You could just put a stop right under the 50-day moving average and right under this reversal bar. Okay. So that right there to me, UNG is a good looking chart. All right. The first test usually has the highest chance to succeed. All right. So I like UNG. I don't like the Philippines. Medical devices, Philippines ETF. Excuse me. Ben's laughing. You know what I mean.
I knew what you meant.
You know what you meant.
So no on EPHE.
No on EPHE.
I'm creating a list. We're going to come back to it. But go ahead.
Okay. So, and we're just going to scroll down this list. So you have some healthcare ETFs that are kind of popping this week. Now, when I say popping, the medical device is up 2% for the week. This, which is IHI, the healthcare ETF is up 1.8% per week. When you see these themes all of a sudden start to creep and crawl into the top of the list, right? a lot of times these runs of these industries and sectors, they can last 6, 9, 12 months, right? They get strong. Strength follows strength, right? So you have a really, really nice uptrend on the IHI, on the medical device ETF. That's a very, very nice uptrend, right? And it's still holding at, close to all-time highs or 52-week highs when the NASDAQ is really pulled back, okay? So for this, I think that it does need a pullback. It's a little bit steep above that moving average. Where's my tools, right? So I have my tracker and I put it on here. So right now this ETF, and you can look in the box if you go look at the SMA 50, right, is 4.9% above this line. All right, I'd like to, for an ETF, I'd like to get a little bit closer. So I'd like to see if this can pull back a little bit, right, and touch the 50-day moving average, or at least get within 2%, 2 to 3%. It might not give you an opportunity, right? So I think this is worth at least putting on a watch list. I think the previous trade, UNG, is probably ready to trade now. I think IHI is definitely worth putting on a watch list. If it pulls back sharply a little bit, finds support, that's a great idea. All right. And one reason why I like it is because there is more confirmation within the healthcare sector, right? So you have the healthcare sector right here. You can see it's a very, very strong trend, very, very strong trend. It's starting to get higher above this 50-day moving average. And sometimes you almost have to expect the mean reversion, right? Maybe you buy it right here. Maybe it goes straight up. But the law of averages is going to say, okay, if it goes up, it's probably going to come back down at some point in time for a reasonable pullback. And since this moved from 260 to 293, it hasn't had a reasonable pullback. So when it's gone up this much, I'm kind of looking for something like that. I would say this is extended, but we're seeing a theme. We're seeing healthcare. And a lot of times when and here's always an idea, when you have an ETF and you're like, I'm seeing this medical device ETF, I'm seeing it pop up in a lot of different screens, a lot of different scanners, but I want to buy some individual stocks. Just go Google the fact sheet. Right, go Google, IYH fact sheet, and the fact sheet will pop up and it will give you the top 10 stocks. This is a great place to look for individual stocks. So if you have a strong ETF, obviously the strong ETF has strong stocks in it, right? And I can easily, just show you how to do that. So we have IYH fact sheet, right? That's all I do. I scroll down. Fact sheet, USI shares. This is what I'm looking for. And this is just kind of give you ideas, right? To give you ideas on the watch list. And when you are on the fact sheet page, all you have to do is scroll down until you get the top 10 holdings. Right there. So you have Johnson & Johnson, UNH, a lot of mega caps. Right? But you can see which one of these are really pushing it up. Just can build a watch list that way. So it's just an easy nugget. If you like a strong ETF, go look at the top 10 holdings. Okay.
Good point.
So
did IYH make the list?
IYH
made the short list?
Yep, it made the short list, but I think IYH is more for a watch list.
Okay.
Because it does need to pull back a little bit. Crypto, the Bitcoin trust, okay? This is a trust, not an ETF, even though they trade the exact same, okay? So a trust holds physical assets or assets like gold bullion, right? You have a lot of gold ETFs, but they're actually trusts because they hold the actual bullion. Just like USO, oil, it holds oil futures, okay? It's different than the individual stocks. But GBTC, all right. I do want to shrink this just a little bit so I can get more chart on the screen. And I want to do an analysis of Bitcoin. All right. So you right here had a topping formation, right? I think most people would argue with that. It's probably not the perfect head and shoulders pattern, but I think most people would say this is a rounded top, right? And there were many, many support lines right here that just broke. Okay. And then it went down, 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 down. It's in death cross mode. What that means, the 50 is under the 200-day moving average. However, now that's the bearish case, right? But I have to make the bullish case, right? So I can draw a trend line right here, right? You can even say the 50-day moving average is a trend line, okay? Because this is kind of a steep trend line. But now it really, really broke out on this day, right? That is a clear, definitive breakout. And then you had a pause, and then you had another move higher, and then you had a pullback right at the long-term moving average yesterday. And it bullishly reversed higher, okay? So let me kind of blow that up, right? You have, so now it's popping, it's pulling back, it's popping, it's pulling back, it's popping today in above average volume. I would say this is a buy right here, okay? I would say this is a buy because, I mean, you look at something that bullishly reverses off a long-term moving average, and then it has some follow through the following day. So it finds support at the 20 and at the 200. It's now above the 50, right? It's popping. So an entry could be today, right? You could enter it now with a stop under yesterday's low. Okay, that is a low risk type of trade, right? With high reward. And when we're looking at potential setups, we want to say, how much risk do I have to take versus how much reward can I get? Okay. I think this has high reward potential. If you lose money, if it rolls over and stops you out, it's probably going to happen pretty quickly. Okay. But I'd rather that if my stop loss is going to get hit, I'd rather get hit quickly so I can move on, right? Move to cash and put something in something else. But I think most of us would whoop, my headphones come out. I think most of us would look at this chart and say, it's coming back, right? It is right at kind of that 40 level, right? But if you look at the actual chart of Bitcoin itself is at 45, 46,000. Man, it came back strong. It really, really came back strong. And now you do have some cryptos that are at or approaching their highs from, several months ago. And these cryptos were down 60%, and now they're already back up. You have to understand, if you're going to enter the crypto market, there's going to be a lot of whipsaws, right? There just is. You got to have to understand that, right? It's not that hard for a crypto investment to pick off your 10% stop loss. But I made a lot of money last year. I mean, when it went up so much. So I'm going to risk the absolute same. I'm going to risk a percentage of my account, right? I'm going to risk 1.5% of my account on every single trade. But I want trades that have much more upside potential. Because what I have found is the win-loss ratio between more conservative stocks and more aggressive stocks is really not that different. Because more aggressive stocks, they might be able to hit your stop loss more quickly. They can also hit your target one more quickly. Whereas your more conservative stocks, they're much slower to hit your target. Right. And so you need a strong market for the conservative stocks to move. You don't need a strong market for aggressive stocks to move. And I know that was kind of a lesson in itself, but I'm going after aggressive stuff because I like fast movers. Over the years, over history, over the last several years, as long as I've been trading, I've found that fast movers make me a lot more money than slow movers.
Can I pull up a couple of quick questions real quick?
Sure.
You see that on the bottom of the screen?
Where would you put the stop loss? Hey, Kevin. Kevin's been in my workshops lately. Been getting some emails from him. Okay. I would put the stop loss right under yesterday's low of 34.58. So maybe 34.50, just kind of a few pennies. All right. So 34.58, you're probably right at a 10% stop loss. But it doesn't really matter because you can, risk 1% of your overall account, right? So that means if you use a 10% stop loss, you can, no matter what size account you have, you can just have a 10% stop loss and risk 1%, right? That way, if you're losing or you go on a losing streak, you're only 1%, right? So I'm not advising people to go out there and take above average positions or use discretion on how much you put in each trade. Treat every trade the same.
I'm going to circle back to a question too here about the percentage of the top 10 holdings in the ETF.
If it
Is that percentage important?
To have more weight. Okay. So I'm going to read the question. Is the percentage of the top 10 holdings in the ETF important? For example, if it's 50%, does it have more weight to comparison to another ETF that is only 5%? Yeah. So there are some ETFs. That's a great question. There are some ETFs that are cap weighted, which means the largest company take up most of the holdings in the ETF. There are some ETFs that are equal weighted. That means every ETF, every stock in that ETF has the exact same amount. I do prefer ETFs that are more equal weighted, right? Because you can get a better sense of how many stocks are moving higher. Whereas if you have something where the top 10 is half, right? Really, you have some of those top stocks that are moving the whole ETF. So, but when you're doing the analysis of, you look at the top 10 holdings, when you're doing the analysis of the top 10 holdings, right, that's irrelevant because you're just looking for setups. All right. It's irrelevant for how much weighting it has when you're looking for individual stocks, if that makes sense. Does that make sense?
I think it was clear. If John is clear on that.
It's a fair question.
Yeah.
Okay. So this looks good. And remember, we don't know if these trades will win or lose. We don't know if it'll roll over and have a bad Monday, right? The odds is you do a lot of little things to give yourself an edge, right? You might start any trading system with a 50-50 edge. And then you use solid entry rules, and that gives you a slight above 50%. And then you give money management rules, and then you give risk management rules. And before you know it, you're the house, okay? So we do all these little things to give us an edge. But I think something that's very, very important, you might hear me get more excited about certain ETFs than others. Put the same amount in every one, or risk the same amount in every one, right? Treat them all the same, because if you don't treat them all the same, you're entering bias, you're entering discretion, and we don't know which ones are going to be our biggest winners.
And this is where we see a lot of our customers or just followers torch accounts and struggle when they do get this bias and they do decide, hey, I'm going to go heavy on this because I heard this or Steve liked this. I promise you, Steve's a very disciplined trader. I've got to watch him and learn from him for a long time because I was not that disciplined starting off at all. It makes a big difference. This is definitely a grind. It's definitely a small advantage just doing this, but that small advantage pays off big. Please, guys, the money management rules, they do matter. The last thing I want to do is hear about somebody who decide to go all in on something that turned the other way. Use some common sense and these money management skills, and you'll be just fine.
And I made every mistake known to man, I have. And I'm hoping that unfortunately the market is a school of hard knocks, right? The only way you learn is to lose money. So, but you can take that as a lesson and slowly build your library of lessons, right? Just slowly. I understand this is a process, but if you have these rules, and a lot of it's mental, then the more rules you put in place and the more you stick to those rules, the better off you'll be.
That kind of makes me laugh to hear you say that, because I've made every mistake too. Seems like every trader, that's the way it is. You just have to learn from experience for yourself.
Oh yeah.
It's a long journey.
I can relate to that.
Well, Greg, it's like if it's important for us to share our journey, right? Because pretty much everybody on this has either gone through it or is going through it. And if we can share what we learned, right, and help really sharpen your skills that way and help giving you some extra rules Sometimes the smallest rules can move mountains in your trading. Absolutely. Years ago, when I realized I had trade bias and I was putting different amounts in different trades and I decided to treat every trade the same, this was a while ago, I immediately just made lots more, right? Because I found that my biggest winners were usually my smallest positions because they were more volatile stocks. I was scared. My losers were my biggest positions because I thought the stock was safe and it rolled over just like any other stock. All right.
Steve, so just to recap, so far, do you have more? Do you want to go down this list a little longer?
Oh, I have lots more. I can go on for days. But yeah, so what I was wanting to do is I'm about to hit the dollar. I want to talk about the dollar for a second.
Okay.
And then we can take a pause, take questions, and then I was going to move on to the 1 month list.
Okay.
Kind of cross-reference it. So if you have an agenda, just insert it whenever.
Go for it, man.
All right, so let's talk about the dollar for a second. And I actually want to look at a longer term chart of the dollar. I want to look at the weekly chart. Let me kind of blow this up a little bit. So the point of this dollar chart, I bet there's a way I can hide this stuff over here to make all this bigger. But the point of the dollar chart is I think this is kind of crystal clear when we're looking at the dollar chart. This is the UUP, right? It just holds dollar futures right here. But, you know, right here at the beginning in, June of 2020, right, the dollar really got weak. And you had that death cross, right? The 10-week moved under the 40-week, and it's been in a downtrend ever since. Okay. Well, all of a sudden, 2 weeks ago, that golden cross happened where the 10-week moved back above the 40-week, right? So you have the golden cross right here. You have the death cross, or you have the death cross right here, uptrend. Or now it's in a new downtrend. Now you have a new uptrend. It's still bottoming, right? But it is showing early signs that the dollar could strengthen. So when we talk about the dollar for a second, you know, I've looked at correlations between the dollar and everything else, and I've just seen too many times throughout history where the dollar can really, what we call decouple from its traditional relationships, right? But one relationship that really holds true is the stronger the dollar is, usually the weaker commodities get. So the dollar got really, really strong this week, and commodities absolutely rolled over. So it's just kind of something to be aware of. Do I think a strong dollar is going to shatter the markets? No. Right? We really haven't had a meaningful pullback all year. You have Fed tapering, you know. But I think the point is I don't try to get too focused down on the why. Like, why is the market going up? Why is the market going down? Because I think that's a sucker's game. It might be fun, cooler talk, but it is very, very hard. This is why economists, I don't think they make any money in the stock market, because they're always focused on fundamentals. They're always focused on, you know, the why. Like, here are the fundamentals, and here is why the market should be doing a certain thing. I don't focus on the why. I focus on what. What is on the chart? What is the chart telling me? Because all those fundamentals are right here anyways. So why would I care? Right? Why would I care what they're saying on TV? Right? The taper talk is interesting. It could send the market down, but the NASDAQ hit all-time highs in the middle of a recession last summer and made its greatest rally in 20 years in the middle of a recession. So if you were watching TV and making your trading decisions last summer, you probably missed out. And I can guarantee you a lot of people on here, they sold that rally way too early. But we have rules to keep us in. We have rules to keep us out. So, you know, the dollar strengthening, that's usually bad for commodities. It's usually bad for international stocks as well, because there is a correlation between commodities and emerging markets, because a lot of the commodities are produced in emerging markets countries. All right, so let me me try to find the bottom here. Wow, that's shrinking. Okay, there we go down here. All right. So that's the top ETFs of the week, but I do have to talk about the 1 month. And we've actually gone longer than I thought. So I'll try to wrap this up and just kind of go with a 1 month trend, right? And see what we can see. All right. So if I so now I'm ranking like what's been the best the last 30 days. I need to shrink this. There we go. Bitcoin right there. All right, we already looked at this. So we saw Bitcoin was at the top of the list on the 1 week or in the top 10. It's also at the top of the list over the last 30 days by far. So, and this is kind of the things we want to pay attention to. Is it strong on the short term? Is it strong on the medium term? All right, we're looking for early trends here. So, I mean, this reversal bar, it did look good, right? I don't know if this, now that's the bullish case. The bullish case is this reversal looked good. The bearish case would say, hey, you know, technically this could be a bear market rally, right? You have a bear market, you have bear market rally, it could break. So I like to look at bullish cases and bearish cases just to mentally prepare myself for anything that can happen. But at the moment, now that it's kind of back above some major moving averages, I tend to look at the glass half full. So you have Bitcoin that is in the top 10. You have Cocoa, which I talked about this in last week's video. I'm going to go to the weekly chart. Cocoa has a history of going absolutely nowhere, right? So I am not going to put too much emphasis on Cocoa for the time being. It needs to really break out of this box. And until it breaks out of this really, really ugly action, I mean, you can see where it's been for the last several years. It's gone nowhere. Really, its whole life. Sugar. Look at the monthly chart in sugar. I would say that is a bullish thrust, right? It's been in a downtrend going way, way back since 2011. Yep. Right. It's been in a downtrend. Now it's up, right? If it does a major pullback and then a re-break, excellent entry, right? And I am looking at a longer term chart. And if you look at a daily chart right here, you can see that we're in a nice steady uptrend. Nice steady uptrend. I think this needs to pull back to the 50-day moving average before consideration, right? Because it's a little bit extended right here. It looks like it wants to pull back. So sugar is something that interesting, maybe to put it on your watch list. And I've seen a lot of agriculture ETFs look good. A lot of the metals and mining rolled over this week. So you have the block ETF, right? This has blockchain, right? This has also been strong in the last 1 month. And I'd make the argument that this is a bullish setup because you have a trend line right here. You had a breakout and then a retest of the trend line right at the cluster of moving averages. To me, this also looks good. And if I want to clear it out, I could say, hey, you could enter right here with just a stop loss under the 200-day moving average. You're only 7% above that line. So you could risk 7%. And obviously, if it breaks above here, game on. This rare earth metal was a very, very strong ETF, right? And it's starting to pull back, even though the metals and miners have pulled back. This is kind of what I'm looking for. I'm like, okay, it was very, very strong. Now it's pulling back closer to the 50-day moving average. It could go into consolidation mode, but I'm going to put this on my watch list because it could really, really, turn around. Like we're just in pullback mode. So you want to buy strong ETFs on a pullback, see if they reverse. I really want to focus on one more, and then we can kind of open it up for Q&A session. Is this LIT, Global Lithium Battery ETF, right? And there's a couple of these lithium battery ETFs or just the lithium, right? So this is a perfect example of something that is in a very, very strong uptrend. You can see right here, it peaked at 74, built a nice cup with handle pattern. You can see that with the breakout zone. I probably would have been more in as it crossed 64.25, but it's just been chopping along, right? And the funny thing is every time it sells off hard, like it sold off hard right here, it bounced right back. Sold off hard, bounced. So it's kind of in a channel. And now it broke down a little deeper. If it comes down right around the 50-day moving average, just a little bit closer and finds support, I think this is a great idea, to see if it bounces. I mean, that looks good to me, because if the market's bouncing today, I get that. But if the market kind of runs out of juice, or maybe pops on Monday and then rolls back over, like, we have to be prepared for this. Right now, when a lot of the growth stocks seem to be getting punished, you want to be sharpening your watch list. You want to say, okay, on the previous uptrend, this was really strong, right? So I want to see if it pulls back in a reasonable manner. And another thing you want to be looking for is, I always ask myself, if the market's going down or if growth stocks are going down, what industries are holding up the best? And I think we identified that the medical industry was holding up, medical supplies, medical devices. It was holding up really well. It was in a nice uptrend. So do we have any questions? See, even when I look at the 3-month, you can see Bitcoin, sugar, UNG, medical devices.
So let's do this. Real quick, I want to break this up into a watch list. I've marked off the ones that you weren't interested in right now, but the potential buys for now. If you were to put your money into something today or in the near future, you were on GBTC.
So on GBTC, it's popping today, right? It looks right. It pulled back a reverse, it's popping.
And then block, or is that a watch list?
Block, what I would say is it did pull back to long-term support. Yes, I would say block, you could enter today, right? Because it broke the trend line. It pulled back to support and it's trying to bounce out of here. So with block, I would say would be an entry with a stop under the 200-day moving average.
That was a good question. Do you clowns really trade or just analysis paralysis? We trade a little bit, buddy.
Okay.
Just block that little guy.
Yeah. I don't understand why people.
I know. People come on and
like trolls. Like, you spend an hour with me and then you just.
No, they're trolls, man.
They're trolls.
It's part of it. So what about the watch list?
Well, one more I would say that is looking interesting is UNG. Right? For a potential trade. It pulled back to the 50-day moving average. Right? It's popping today. The only thing I would be cautious is I actually might put this on a watch list because energy really got hit hard this last week. Like, just absolutely, oil got punished. Sometimes UNG nat gas can buck the oil trend. But this is one worth looking at. Now, a watch list. Now let's talk about watch lists. So right now, today, I think the crypto ETFs probably your best bet. But let's look at a couple good ones that we talked about that I think are in uptrends and need a pullback. Sugar, cane is in an uptrend and needs a pullback. It doesn't have to be some sexy tech stock, right? We don't know where we're going to get trends from. We're just looking for trends here. I think this lithium battery ETF, Global X, LIT, it's in a very, very strong uptrend and it's starting to pull back. I also think that the kind of in the healthcare. I think the medical devices. So what was that? ETF. I think the medical devices, IHI, is a watch list. I think this is a strong one that needs to pull back.
All right, I'm going to send out this watch list and potential buy list in a summer email, but I'm just taking some notes. REMX. That's the one I'm missing.
I think with the commodities, I would say you have some strong commodities that look good. I kind of almost have a proceed with caution just because how bad everything got hit and the dollar is rising. But the agriculture seems to be bucking the trend. But it's definitely worth the watch list.
Okay. All right, I've got this. I will break this down and send this. We had some questions. Scroll up. I don't want to miss anybody. I'm going to go back to. There was a question. Greg, this might be a question for you. What ETFs are good with options other than SPX, the Qs, and SPY? Anything on that?
For that, I'm going to refrain from answering actually, because I don't usually do options on ETFs. I usually do them on individual stocks. So I can't really answer that question. Once in a while I do them on SPY, but mostly I like to do it on individual stocks. So I think I'll not answer that particular one.
That's a fair opinion. Steve, anything to add to that?
Yeah. So, I mean, for me, like when we do the reversals, like we usually just do a complimentary like call option alert. So I wouldn't say that I have just a couple ETFs that, are my go-to. I'm going to go to whatever the market's telling me is trying to get in an uptrend. All right. So I would say, so my short answer was anything that's moving higher, you could throw a call option on there. But as far as like have a short list, no.
Okay.
I don't. And I think sometimes options are better for individual stocks because stocks move more than options, right? So to get a major move in your option, if you're buying simple calls or simple puts, like probably need the stocks to make that bigger move. Options are a little bit, or ETFs are a little bit slower.
Okay. Here's one. Can you read them on the screen when I put them on there, Steve?
Yep.
Okay.
How long per day do you advise that a trader study the chart and do things, including back tests, in order to find things that will give the edge we seek? I mean, how long per day? That's a great question. So, as far as studying charts, right, I think that you can, spend 20 minutes today to go through the watch list. But I'm going to be honest with you. The best thing that ever helped me really learn charts, and this was kind of early in my days, is I would just pick randomly 10 stocks. I would print them off, and then I would take a pen. I'd get away from the computer screen, and then I would just mark them up. I'd say support, resistance, breakout. The most important thing is just to be observant, right? And sometimes you got a lot of distractions when you're just staring at charts all day. That was an activity that worked well for me. And you can do that on the weekend away from the noise. But I would say, 20 minutes per day, kind of finding setups. But the most important thing when you're studying charts is to be observant, right? Find out, look for support, resistance, volume all the time. 20 minutes a day should be good, right? I don't think you really need to spend more time than that. Then you're just kind of over, unless you're really kind of seeing things. What was the second half of that question? Do things such as back tests in order to find. I'd be interested to know what kind of back testing you're doing to answer that question. I mean, I do back tests all the time, right? But I'm really in the industry and I really nerd out like that. So it's just, it really just depends. I think, if you have an idea, if you have the software, go ahead and back test it, right? And just keep throwing it out. I don't really think there's great answers as far as back testing. But feel free, if you back test anything and you have some questions, email me, because a lot of times there's a lot of things to think about that a back test will show you a rosy picture that, you might not be aware of in the future. So when I say if you are back testing, make sure you're back testing at least 10 years. That way you have bear markets and everything included along the way.
That's a good point. I'm just going to keep popping them up on the screen and see.
What about copper ETF? So I think that rolled over. So this was, like I said, what a week can come. Like last week, copper was one of the biggest winners. And if you ignore these 4 bars or these 5 bars right here, this really was looking bullish, because before this week, you had, kind of this, you could call it an inverse head and shoulders pattern right there, breakout of the neckline. It got so close to the neckline and then it just rolled over. So for copper, I'd get out of the way, right? It just does not look good right now. And even though you could make the bullish case, right? Well, maybe it goes down and it snaps back hard, right? That's the bullish case for copper. For me, I'm following the trend, right? So this is, when I say the bullish case, it's probably more of a mean reversion, right? Like it's going to snap back some way. So, but you would have to time it right there. But as far as from a trend goes, it is rolling over and breaking down. I would say that if it does snap back, to be honest with you, it's probably a better short right in this area than it is long.
Okay.
Do you look at, what is COT?
I didn't know. I hoped you did.
No. Chris, what is COT? There's so many acronyms out there. If you could tell me what that is, I'd be happy to respond.
We'll come back to that.
I'm going to Google COT.
Terrence, I think UNG would be a good call option for January expiration. Terrence may have more experience trading options on ETFs. I appreciate the input, Terrence.
So
can you talk about how to – here, let's go to this one. We'll come back to Chris when we figure out what COT was. Or maybe – commitment of traders. Commitment of traders.
I just looked at that, and from the look of it, it is a weekly report issue. No, I don't. I've never even heard of it. So I've been doing this so long. I have my own scanners, my own processes. I don't really go to outside sources for ideas. It's just I don't. Can you talk about how to scan for the best ETFs or stocks? So I think a good way to scan for some of the best ETFs, right? We look at what is the strongest on the 1 week, but 1 week is incredibly short term. All right. It really just is. 1 week is incredibly short term. So you can have a lot of whipsaws. The shorter time frame you go, the more whipsaws you're going to have, like false breakouts and stuff like that. So I think you can easily just build a list of ETFs and just say, hey, what's strongest over the last 30 days? I think that's a great way to look, because what I'm trying to do as a trend follower, I'm trying to catch a trend early, or I'm trying to catch something in the middle of the move. So, and a lot of times, if something is going to be a trend that lasts 6 to 12 months and you're looking 30 days, you'll find a lot of early trends. I think Bitcoin is a great example, right? It's up a lot in the last 30 days. Same thing with sugar. Sugar is up a lot in the last 30 days. These are all great ideas. Okay. So say 30 days, that sweet spot. That's probably what I would do. Create a scanner of the strongest ETF, and you can just go by performance, right? Just percentage gain. It doesn't have to be fancy indicators.
One of the things I really like to look for breakouts for new trends starting is volume. Because when you see a big move up or down on high volume, that's usually a good indication it might be the beginning of a move that's going to carry through for a while. So I definitely like to watch big volume.
Absolutely. And there are a lot of great predetermined scans in most brokers. Like they'll just have a list of predetermined scans, and they usually have like ETFs that are breaking out, right? That's also a great list. So, I mean, those are probably, if I were to send you two places, I'd say, hey, do a 30-day scan so we can catch some trends early. And I would say, hey, do an ETF breakout scan.
Okay. Steve, where was the question? Somebody asked if there were any good books that you recommended. Oh, to learn charting, I guess in general, but any books that you remember? Look at your shelf.
All right, let me look at this shelf. So I think Stan Weinstein has a really good book about charting. It's really, really old. Greg, weren't we talking about that the other day? What's the name of that? Was it Greg and I that were talking about Stan? Maybe it was another trader I was talking to, but Stan Weinstein has a popular book back in the 80s. It talks about charting. But I got to be honest with you, there are some great cheap courses on Udemy, UDMY, that, I mean, for like $10, like you can just go into Udemy and type in their little search bar, technical analysis. And there will be like 30 courses. They're all like 10 or $20. And just go with ones that have the highest rankings, that have the best reviews, have the most sales. Those are usually the most popular and the most best. So you can get a lot of good courses there. And it kind of depends. Are you looking to learn candlesticks? Are you looking to learn breakouts? There's usually something there you can find.
Yeah, we've taken a few on there.
So, okay, someone asked if I'm interested in interpreting candle patterns as you use your strategy. I like price and volume. I think a lot of the candle patterns, which means I put more emphasis on price and volume than the individual candlesticks. A lot of the individual candlesticks, it's incredibly short, right? You're looking for 1 bar, maybe 2 bars, like that. That's really, really short, or where it closes in the day. For the most part, if I see a stock that closes, opens below a moving average and by the end of the day closes above the moving average, so you got that reversal, I mean, I love that, right? That's really what I'm looking for. So I don't, focus on the dojis or anything like that, because I think you can really do analysis paralysis with some of those candlesticks. And it's a great question, but I look at these bar charts on MarketSmith more than I do candlesticks, because all I need to know is it up or down, and then did it close on the top of the range or did it close on the bottom of the range?
I'm sending you another.
Precious metals are getting hard. At what time would you enter any of the precious metals? Yes, they are getting hard. Let's just look at a common one like GDX. This is an ugly chart. I mean, it's in a downtrend. So at what point would I get in? I would need to see a weekly reversal, Kevin. Like if it like went down really hard and then all of a sudden you got that weekly reversal bar, right? That's probably in above average volume. That's where I would get in. Before then, I'm not looking to catch a falling knife. I need to see some kind of bullish reversal signal.
Steve, was that book The Secrets for Profiting in Bull or Bear Markets?
Yes.
Thank you, Jim.
Yes. So if volume says 3x the 20-day moving average,
that might have been attached to something we were talking about a second ago, because it was a few minutes ago. Chris, could you elaborate on that?
I'll be right back in 5 seconds.
Okay.
I can answer that question regarding stocks. I don't know about options. Can everybody hear me okay?
I can hear you.
Okay, good. So for stocks, when I see a big bar up and I want to see volume that's at least double normal, like 30 to 90-day average volume, at least double, but it can easily be 3, 4, 5 times the volume for an individual stock. You're probably not going to see that for an ETF. So maybe at least 50% higher, I would guess, for an ETF to maybe double, 50% higher than normal volume. But definitely for individual stocks, when you see a big spike in volume, big jump up, whether this trade is up or down, it's likely to continue in that same direction. And so that's a great way to spot potential new trades to get into.
Y'all waiting on me?
Nope. Nope, we are not. Greg jumped in on it.
Okay.
I
What
was
else
just
we
talking
got?
about volume.
Where again?
Volume spikes for individual stocks as well as ETFs.
Gotcha.
So I am seeing one question that says, talk about leverage ETFs are dangerous to keep them long-term. Should use them only for day trades versus normal ETFs. Yes, I would agree with that. I mean, I'll hold a leverage ETF, John, I can hold it for a month or two. Okay. But yes, it's not a buy and hold situation.
Okay. Guys, we have been on here for an hour and 20 minutes so far. I really appreciate everybody coming on. Are there any more questions like that we need to? We're going to send out this watch list. Obviously, you guys can always email us at support@thetradersplan. We answer our own emails. I'll send out this watch list and the buy list on this, but I really want y'all to know like how much we appreciate your support and coming and joining us for this, because I really want this to be something that we can help with and something that you guys engage with and that's entertaining as well as profitable. And everybody was awesome. I mean, besides for, the little troll, you guys were great. And you're very much exactly what we were hoping this could be. Greg, we're really just getting to work with you and finally getting on live. And, I appreciate all your input here. We're going to get more shows and more segments coming out over the next few weeks. How often are you going to do this? Keith, my goal is to do this daily, maybe a few segments a day eventually, but we've got to build out segments, content. The thing is, Steve talks about this stuff all day long. Like, this is what I hear on a normal basis. This is what we try to get out in emails or try to get into videos. So I think that we can really, speed up some things and help you guys get to, this being a consistent income stream. The more that we do this and the more that we have this accountability for you and bring you into these trades, like, I'm honestly hoping that next time we talk about ETFs next Friday, that we're talking about who made the most in this group out of, the trades that are made. Again, it is what it is. Some of them will go up, some will go down. We'll look at some from the watch list. But our goal here is income and growth and to become better traders and to really turn this into a hobby, into a business. And that does take time. But seriously, really appreciate you all coming out for this pilot show and being patient with us. We'll get better. I promise we'll get better.
And like Ben said, I love the engagement, right? This was some of the best engagement we ever had. And that was really designed. That was, by design. We were hoping it would be like that. So hats off to you guys. And I don't know if Ben mentioned, pretty soon we're going to be implementing prizes, right? We're going to do drawings. We're going to do competitions. We have ideas of stock pick competitions. We have all kinds of crazy ideas that we're going to try to put together. Greg is going to be launching an option income workshop. So initially we'll probably do 2 to 3 a week, right? And really kind of build this out. But, this is version 1, and we hope you enjoyed it.
And honestly, give us the feedback. Email me, at support@thetradersplan and be like, Ben, I've got a great idea for something you guys might want to try, or something that you could, add to this. Like, we are still very much in the infancy of turning, our content delivery system into a live experience. And I think we'll all get a lot more out of it. So, like, don't hesitate. I'm not that guy that just, ignores people. Just email me if you've got something. Will this be a subscriber service? Good question, Keith. Obviously, this is a business for us. This is what we do for a living. Right now, we've got to put out content. We've got to get you guys profitable. There will be services that may be for members, or we may do private workshops, but we are going to do a ton of free streaming as well. Like, honestly, we'll be doing picks and contests. We may have some of both, but right now, we just decided to kind of do this, and we didn't really say, hey, we're gonna do this to make money and we're gonna do this to make money. Our goal was to get out here and get in front of you guys and to start building an audience in this live version. So yes, there will be things that that you can purchase, or picks that you can purchase, or systems, but we will put out plenty of education just, to help build this, what we're doing here.
Yep.
So great question, Keith.
Yeah, it's fair. Our goal is really just to build an audience and entertain, and like it's been said, help make you money. All right, that's our first goal.
Yeah, if we make you money and we're putting out something, it'd be a lot easier for you to join us for something else. So, like, let's all just make money.
Yeah, I feel pretty good about it. This was actually a great first session.
It was fun.
It was fun.
This is fun. So yeah, I appreciate it too, guys. I will get this recording. Fingers crossed, nothing goes wrong. Hopefully we're not all muted or something, but I'll get it out and I'll send out an email. Guys, you'll get a blast from me when these are going. And if you're subscribed to the channel, I believe you should get updates when we are doing live things. I want to do one mid next week. I'll get a topic going, but we should do the ETF one next Friday, right?
I think that's kind of.
We'll get a schedule out.
We'll get a schedule out. The goal is to do ETFs on Friday, maybe do option income on Wednesday or Thursday. We'll probably pick another topic. So pretty soon, I think we're going to be Wednesday, Thursday, Friday, and then we'll add more.
AO asked, how do you join your list? Hey, email me. I can't type, but email me. If you follow this channel, you should be on that list. Obviously, you're on some list, right? If you got here, did you get an email from me this morning, AO?
Yeah, he's got to be on the list because only.
So if you email me, I'll figure out what list you're on, and try to put you in place. We're working some things out with how we're going to do our content and distribution going forward. Like I'm saying, hopefully a lot of it's live. So, but we'll figure it out. I have it recorded. If you're running trouble, of course you do, James. Thank you for that.
Jim, my man, Jim.
Yeah, I hope you guys enjoyed it. Think about it. If you've got anything that, bring some picks next time. I do appreciate the engagement, but next time we probably won't look at ETFs. We'll probably do something with some reversals or just stocks in general. We'll get something going. But thanks again, and everybody have a great weekend.
Everybody have a great weekend.
And thanks, Greg. We'll talk soon.
Thank you. Appreciate it.
All right. See you guys.